This whole crazy crypto mining situation is sort of reminiscent of the California gold rush of the mid-1800s. And just like 49ers drove out indigenous populations off of their land in a frantic search for gold, so too today's crypto miners are forcing gamers out of what is effectively their market, taking all the GPUs away from gaming. The hope is that once this new gold fever ends, PC enthusiasts will be able to get their hands on GPUs at affordable prices again. But is this Bitcoin bubble really going to burst? Will the market then be flooded with affordable second-hand GPUs like back in 2017? Or has the GPU market changed for good? Is it possible that gamers will never have access to GPUs again without spending a fortune? As it turns out, there's a lot more to this whole Bitcoin situation than just another speculative gold rush. There's a lot going on in the background that AMD and Nvidia are not telling you. In fact, and this might sound a bit dramatic, I think the repercussions of this crypto bubble go all the way to the top, to a clash between the richest humans on Earth. If you want to expand your knowledge, be it in computation, programming, math, or science, there's no better way than interacting with real-world examples. And today's sponsor, Brilliant.org, offers the best way to learn online, with fun and accessible interactive puzzles and exercises that challenge you, but also help you understand things step by step when you get them wrong. Visual examples work much better for myself than abstract textbook explanations or formulas, which is why I really like Brilliant's approach to learning. I've often recommended Brilliant's computer science fundamentals to people who ask me where they should start learning about computation. This course explains complex topics like parallelism, Amdahl's law, or concurrency in an easy-to-understand manner with fun practical examples and puzzles. There's also the Introduction to Neural Networks course, which, as you can imagine, is a topic that's important to get a good grasp of right now and going forward. And as you might have guessed, there's a course on cryptocurrency, and it's fantastic, covering topics like authentication and tamper resistance, and many others to help you wrap your hand around one of today's hottest topics. So check out brilliant.org/Cortex. You can sign up for free, and the first 256 people who do will get 20% off an annual premium subscription. Link in the description. So a few months ago I decided to buy some Bitcoin based on a thesis that it would see another cycle of growth this year. I bought BTC at just shy of 30,000 per coin and had planned to sell once it hit 60,000, therefore doubling my investment. For the sake of disclosure, I currently own no Bitcoin, but I do have several coins from random cryptos that I acquired through mining or donations during the making of this video. I have no interest in seeing Bitcoin rise or fall, and nothing of what I'm about to say is financial advice. Having said that, I believe Bitcoin will eventually reach at least $1 million per Bitcoin, probably a lot more. So if I believe that it will go that high, why did I sell the Bitcoin I bought a few months ago, you might ask? Here in Europe, we have a few fintech companies that are gradually replacing traditional banks, and around the world there are many similar services rising. The one I use is called Revolut, and I should say I have no association with them, it just happens to be the one I started using. In the Revolut app you have the option to buy Bitcoin, so basically you take fiat currency from your account, place a buying order for Bitcoin, and they give you the corresponding amount in Bitcoin at whatever the price at the time is. So in addition to your regular wallet with your euros, you get a crypto wallet with your Bitcoin. But there's a catch. They will take your fiat currency and indeed buy Bitcoin, but if you decide to sell, they won't give you back your Bitcoin. They will give you back fiat currency, euros in my case, and keep the actual Bitcoin for themselves. And what's wrong with that, you might ask? You buy Bitcoin cheap, like I did, and you sell at a higher price than you paid, and you make a profit, and Revolut or whatever service you use make a loss, right? Well, it's not that simple. As soon as I realized realized that I couldn't use my crypto account in Revolut as a traditional wallet, I started thinking about why they would be taking on the risk of losing money on Bitcoin like this, and I went and had a look at how other platforms handle buying and selling Bitcoin. PayPal recently announced a feature called Crypto Checkout Service, and it works very similarly to the service I was using. You can buy Bitcoin inside PayPal using your money, but you can't use it as a crypto wallet. So you can't actually send crypto or use the crypto for anything. You simply give PayPal some money and you now own Bitcoin, but not really. You actually just own a representation of Bitcoin in your local fiat currency, just like what was happening with the Bitcoin I got on Revolut. And if you decide to incorporate the PayPal crypto merchant service into your business to accept crypto as a payment, guess what? You will never receive payment in Bitcoin, but rather in your analog currency at whatever the value of Bitcoin is at that moment. So you get dollars or euros or pounds, but never the actual Bitcoin. Now, you might remember that back in February of this year, Tesla revealed they had acquired $1.5 billion worth of Bitcoin. And then a month later, Elon Musk announced on Twitter, as he likes to do, that you could now buy a Tesla vehicle using Bitcoin, and that Bitcoin used for such purchases would stay within the company as Bitcoin, instead of Tesla converting it into a fiat currency. So between PayPal, Revolut, and Tesla, do you see a pattern forming here? What these and many other companies are doing is they are taking your money, your dollars or euros or whatever, and they are using it to buy actual Bitcoin or to cover a Bitcoin purchase they have already placed, and they give you a token of the Bitcoin value in fiat currency, but not the Bitcoin itself. As soon as I realized that Revolut was doing this, I instantly sold the Bitcoin I had on the service, even though I believe if I had held it for a few more months, I would have sold it for an even higher profit. And we'll get to that in a minute. What these companies are doing is buying as much Bitcoin as they can and keeping it, and they are using our money to do so. So let's see if we can understand what's happening here. You have to remember that Bitcoin is a finite thing. The dollar isn't. Dollars are being printed out of thin air by the trillions now, whereas Bitcoin will eventually run out, and it will hold its value, whether it's worth 1 cent per Bitcoin or 1 million per Bitcoin. But then you might ask, what if Bitcoin crashes? Won't these companies be losing millions or billions of dollars by doing this and then be left with a ton of Bitcoin that's not worth anything? Well, I'm sure you've heard plenty of prominent figures alerting to the dangers of Bitcoin, one such person being everyone's favorite poop water drinker, Bill Gates. Elon has tons of money and he's very sophisticated, so I don't worry that his Bitcoin will sort of randomly go up or down. I do think people get bought into these manias who may not have as much money to spare. My general thought would be that if you have less money than Elon, you should probably watch out. Sounds like sensible advice, right? But why on earth would Bill Gates be commenting on such a thing? Why would he even care if you won or lost money with Bitcoin? I suspect we can figure out what's going on here by looking at the Bitcoin cycle so far, how they came about, and more importantly, how Bitcoin crashed. When you Google Bitcoin's value, you get this handy little chart with the crypto's value over time, and if you click on max, you get the full history of the coin. Or do you? If you hover over it, you see that it only goes back as far as November of 2015. What happened then? Well, Bitcoin passed $400 for the first time. I bet you wish you had bought Bitcoin at $400, don't you? But anyway, the history of Bitcoin goes much further back than this. If we look at when Bitcoin first hit $1 in exchanges, we'll have to look back all the way to the summer of 2011. So that's 10 years ago. So looking that far back, we actually get a very interesting picture of Bitcoin. You see 3 very similar cycles. In this first cycle of growth here, the first people putting trust into Bitcoin were mostly nerds or techies within the insular world of cryptography. But after a viral surge by media covering the new technology in 2010, and then a hugely popular article on Forbes early in 2011, big money from venture capital started entering the picture. This is important, resulting in a huge spike in value as you can see here in the summer of 2011. And then you see Bitcoin's first crash. Why did it crash? Well, first Mt. Gox, the largest Bitcoin exchange at the time, admitted it had been compromised and user information had been leaked. Then MyBitcoin.com went offline for a week and then came back with half of its Bitcoin holdings missing. Following a bunch of episodes of people losing thousands of dollars because they lost a password to their crypto wallets, or hackers gaining control of exchanges, the mainstream media of course jumped on the opportunity to bash Bitcoin as a pyramid scheme or as a fad, turning it into a bit of a joke, which led to Bitcoin crashing and spending about a year in the wasteland. So the first crash happened because of the hackers, people losing their money because of bad security practices, and because the media jumped on the opportunity to be alarmist regarding the technology because, that brings clicks. Then we get our second cycle, where again Bitcoin starts to rise and then crashes again and stays stagnant for a few more years. Here's what Warren Buffett said at the height of this second cycle. Stay away from it. It's a mirage, basically. It's a method of transmitting money. A check is a way of transmitting money too. Are checks worth a whole lot of money just because they can transmit money? Are money orders? The idea that it has some huge intrinsic value is just a joke in my view. So here's Bill Gates' Bass Pal saying that Bitcoin is a joke at the height of this cycle. And again, following more security issues and warnings from high-profile investors like Buffett, the mainstream media did what they always do. They first raised Bitcoin's profile, and then as soon as there was enough traction to make it collapse, they did everything they could to help it on its way. Following this cycle, we have a few years where Bitcoin stayed around $300 per coin and then again started climbing steadily. And as gamers, I'm sure you'll remember, Bitcoin again exploded in value, causing the first real GPU apocalypse in 2017, as miners were buying all the GPUs they could get their hands on. So this was the third cycle. And again, after that craziness in 2017, another crash came. And with mining no longer being profitable, the market was flooded with used GPUs. After the previous cycles, you'd think that this time Bitcoin would at least stabilize, but instead it collapsed again, from around 22,000 per coin in early 2018 to around 3,000 per coin at the end of that year. So what do these cycles mean, and why does this keep happening? Well, traditional markets have mechanisms that halt trading when there are large losses in the value of an asset. These are known as circuit breakers. They will automatically pause trading when an asset falls by a set percentage. Bitcoin has no such circuit breakers. So when the founder of Bitcoin.com said back in 2017 that he was selling his Bitcoin, a chain reaction started that caused all the speculative investors to start selling their Bitcoin as well. Then NiceHash in Slovenia got supposedly hacked at the end of 2017. Then Japan's CoinCheck got hacked, losing $530 million in January of 2018. And then Binance got compromised in March of that year. As you can imagine, the mainstream media, which had again been building hype around the magical properties of Bitcoin, then decided to pounce back on Bitcoin to help it on its way down. And of course, it wouldn't be another cycle without prominent figures like Soros, Jack Ma, and JP Morgan's leadership calling Bitcoin a fraud and a bubble. So we can clearly see a pattern here. Whenever Bitcoin starts a huge rally in value, a set of events take place that cause it to crash. Most notably, big holders saying they are selling, prominent figures warning of the risks that Bitcoin represents to the regular Joe, and mainstream media presenting Bitcoin as a fab or a bubble. That, of course, after a period of building hype around it. After 2017, we can see here on the chart that Bitcoin went back to the wilderness to think about the meaning of life for another couple of years until we get to now, in 2021, and the second GPU apocalypse, which has left a lot of you watching without a GPU to buy at reasonable prices, seeing as they are all being sold to miners again. And wouldn't you know it, just like with the previous cycles, as Bitcoin surges, we have the establishment's prominent figures, this time Bill Gates' example that we saw earlier, bashing Bitcoin Bitcoin, and old money institutions like the UK's Financial Conduct Authority warning people that they will lose all of their money if they invest in Bitcoin. And let's not forget the mainstream media, which is already circling the waters preparing for a feeding frenzy when the bubble bursts again. So back to the same question, what can we learn from these cycles? Well, we can see that there's a lot more going on here than just the struggles of a new method for exchanging money in its coming of age. Judging by the constant interventions from certain parties and figures, be it in favor or against Bitcoin, there seems to be a clash happening between the old money and the new money, or more accurately, the ones that currently hold the most power and the ones who want to take it away for themselves. Bill Gates, Warren Buffett, central banks, and government agencies all seem to be on the same page when it comes to Bitcoin. It's a threat to their control over the world. The new blood, on the other hand, champions Bitcoin because it sees Bitcoin as an opportunity to shift the balance of power towards them. Elon Musk, PayPal, Revolut, Square, and all of these people and entities who are championing Bitcoin see it as a huge opportunity to have power shift from the old guard to the new. Does this all sound like a conspiracy theory or something crazy like that? Well, think about it. If Bitcoin becomes the new gold standard, and if Revolut or PayPal or Tesla hold the majority of Bitcoin, which remember is a finite resource, then they will indeed hold the power if Bitcoin wins over traditional centralized currency. Bill Gates, central banks, and their buddies, on the other hand, will continue to hold power and influence if Bitcoin capitulates, and the same old assets like dollars or gold remain as the compass that guides the financial world and transactions. So there's no conspiracy theory here, it's simply a fight for power over what will represent wealth in the future. This clash of new blood and old blood has Bitcoin at its core, so the original purpose of Bitcoin is pretty much irrelevant at this point. If you thought that Bitcoin was going to finally give the people power over a decentralized system of trade, maybe you forgot about the corruption of man. Bitcoin is finite. Let me say that again. So if an individual or a company holds and hoards that Bitcoin, and Bitcoin becomes the new gold standard, they hold the power. No one can issue more Bitcoin. So you see why Revolut took my money and bought Bitcoin, but then when I sold it, they gave me back fiat currency instead of the actual Bitcoin, even though they lost money in the process. You see why Tesla will let you buy a car with Bitcoin and then hold on to that Bitcoin, and why PayPal is not letting you use their crypto service as a wallet, but rather just giving you a representation of Bitcoin in fiat currency, while they keep the actual Bitcoin for themselves. Maybe now it makes sense to you why the Winklevoss brothers created the Gemini Bitcoin exchange. So this struggle for power will continue on until eventually Bitcoin settles at a fixed price, which will probably happen within a decade. Again, this is not financial advice, just my analysis, but I think it's pretty inevitable that Bitcoin will cross the $1 million mark based on the cycles that we've seen so far. After all, it has resisted hacking, which resulted in billions of dollars in theft. It has resisted being bashed by influential billionaires, and it has resisted being used by mainstream media for clickbait articles one day on its virtues and the next on how it's a joke. And despite all this, you might have noticed something interesting about this chart. Over time, Bitcoin is on the rise. The crazy fluctuation in price and the cycles of bubbles come from the events we looked at earlier, but overall the trend is for it to continue rising. Personally, looking at just the short term, I think there's another big rally coming towards the summer, which is when I was originally planning to sell. I had set my target at 60,000 euros per coin, which was a conservative estimate to hedge my bets, so to speak, but I think it will reach around 100,000 by the summer. In reality, the value is kind of irrelevant because I think the cycle will repeat and there will be another crash towards the end of this year, just like with the previous 3 cycles. Now, circling back to the gold rush of the 1800s, just like miners back then needed picks and shovels and other tools to mine, so too miners today need GPUs. So what are Nvidia and AMD, the 2 main sellers of the proverbial picks and shovels, doing in the midst of all this? Before I tell you what I think will happen to the GPU market in the next few months, I just want to let you know that I will be uploading another video shortly after this one with a GPU mining guide for Nvidia and AMD GPUs, but not here on YouTube, but rather over at Odyssey.com. I'll put a link below to that free platform exclusive video if you want to learn about how to use your own Nvidia or AMD GPU for mining without resorting to scams like NiceHash. And I will also explain my thoughts on mining in general in that video, so go check it out afterwards. Now, Nvidia being not only the biggest GPU company around, but also having the GPUs that currently are best suited for mining, obviously has a lot to win whenever there's a crypto rally. And of course, even though 2020 was a terrible year for a lot of businesses because of the pandemic, Nvidia thrived. In fact, Nvidia are taking this opportunity to present themselves as caring for gamers by supposedly limiting the RTX 3060's ability to mine and even creating a new range of GPUs just for mining. Now, the reality is that Nvidia is selling GPUs directly to mining farms at much higher margins than they would if they were selling them to you. Even if they're not doing this directly, given that now the spotlight is really on them, I have no doubt they're doing it through their partners. In a report from DigiTimes, MSI's chairman Joseph Su warned that graphics cards prices would rise this year because of tight supplies. And amusingly, on the same day, the Asus leadership were adamant to point out that GPU prices were going up because, again, of tight supplies. Asus went further than MSI on the matter, going as far as to say that Samsung was to blame for the supply constraints, basically throwing Samsung under the bus as the ones to blame for the price hikes because of their 8nm process not delivering enough Nvidia chips. This is complete and utter bullshit. First of all, MSI had the highest ever annual profits in 2020, most of which came from, you've guessed it, selling graphics cards. And since when have Asus publicly commented on yield problems at Nvidia? At least these two Nvidia buddies could have made it less obvious by not making these comments just a few hours apart. I mean, it makes it a bit too obvious that Nvidia asked them to say this crap, to blame things on Samsung and supply constraints, while never even hinting at mining as the real issue here. In case you didn't know, despite Nvidia publicly saying that they are gimping the gaming GPU's mining performance, the reality is that their partners will not only sell those very same GPUs directly to miners, but even include special BIOSes that bypass any such limitations imposed by Nvidia. And if you think AMD is any better, you should think again. AMD's partners are doing the exact same thing, selling ASICs directly to miners, although at a much smaller scale. And why would AMD or partners sell GPUs to you at, say, 50% margin when they can sell the same products to mining farms at 100 or 200% margin? They'd be crazy not to sell them to miners. In fact, from a business standpoint, I think both Nvidia and AMD are doing exactly what they should be doing, trying to get the most profit for their business as possible. They're not charities looking after the welfare of gamers. They are massive corporations with thousands of people relying on them, with investors to whom they have a responsibility to exist as a company for many years to come. The problem is posing as if they're anything else than a corporation. Pretending to gimp performance on the 3060 is not just disingenuous, it's plain offensive, and it boggles the mind how many media outlets out there are presenting Nvidia as the saint patrons of gamers because of this. By the way, the 3060 being gimped for mining is not even helping consumers in any way. You shouldn't have a product you buy be limited in what it can do for you. Not everyone buys a GPU exclusively to game on. Maybe you want it for AI research, or maybe you want to mine cryptocurrency when you're away from the computer. How is gimping the 3060 helpful in any way other than as a PR stunt for Nvidia in order to get brownie points? So the last thing we should touch on is what should you do now if you actually want a GPU for gaming. Now, I unfortunately don't own a crystal ball, so all I can do is look at the most likely scenario. And the reason why I went through explaining my thoughts on Bitcoin cycles is because I think this year we will see yet another one, which means by the end of the year, if this analysis is indeed correct, Bitcoin will probably come down from whatever high it hits. Again, my guess being somewhere around 100,000 to 150,000, down to something like $40,000 per coin, where it will stagnate for another few years before the next cycle comes about again. Mainstream media will be hyping up Bitcoin for the coming months, and then feed on the frenzy when it collapses. Prominent old money figures like Bill Gates will say "I told you so," while new money figures will continue hoarding Bitcoin, knowing that with enough trust put into it, it will carry on its way to becoming the new gold standard within a decade. If this all does indeed materialize, as it did in the previous 3 cycles, then if it were my GPU, I would sell it now for twice what I paid for it, and then buy it back towards the end of the year for pennies. I'm not saying that's what you should do. You should do your own research and come up with your own thesis, but if it were my GPUs, that's what I would do. That does mean you'd stay a few months without access to a gaming GPU, so perhaps it might be a good time to try out one of the streaming services out there, like Stadia, or maybe even help Nvidia come full circle and really maximize their profits and try out their gaming streaming service. I hear it's actually quite good. In fact, I'm surprised more gaming streaming services are not popping up. Maybe Apple has something in the works, maybe AMD's partnering with someone for this. That's a story for another day. Don't forget to check out my mining guide on Odyssey, link below. This video was made possible by my awesome patrons who are helping keep this channel alive through ever-thinning ad revenue on YouTube. Consider supporting my work today by joining at patreon.com/Cortex or at subscribestar.com/Cortex. By joining, you will get exclusive access to the Cortex Discord server, where you can talk to me directly and to other like-minded enthusiasts in a healthy and welcoming community. Please give this video a like and share it on social media, as that really helps. Thanks for watching, and until the next one.